Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
Today we have some major developments shaping India's debt market. From Cholamandalam Investment and Finance Company preparing its biggest ever floating rate bond issue, to Unifin's Capital India tapping investors through secured non-convertible debentures, and Wockhardt receiving a significant credit rating upgrade, there's a lot unfolding across corporate credit and bond markets today.
Absolutely, Vijendra. And what makes today especially interesting is the strong demand we are seeing for high-rated floating rate instruments despite volatility in interest rate expectations. Investors are clearly balancing the search for yield with concerns around inflation, liquidity, and possible Reserve Bank of India tightening in the months ahead.
Let's begin with Cholamandalam Investment and Finance Company, which is launching its largest private debt issue to date, aiming to raise Rs 5,000 crores through floating rate bonds maturing in 2 years and 9 months. The bonds carry an initial coupon of 8.12%, resetting quarterly based on the 3-month Treasury bill yield plus 2.75%, and the issue carries AA plus ratings from ICRA and CARE, reflecting strong investor confidence and credit quality.
And the structure itself is drawing attention, Vijendra. Along with the base issue and green shoe option, the company is strategically entering the market at a time when investors are increasingly preferring floating rate products over fixed rate debt because of uncertainty around future interest rates. Commitment bids are expected on May 25th, and strong participation could make this one of the most closely watched bond issuances of the year.
Another important fundraising story comes from Unifin's Capital India, which is raising up to Rs 20 crores through secured non-convertible debentures carrying a fixed coupon of 13% per annum, maturing on May 20, 2028. The issue includes a green shoe option of Rs 10 crores. Each debenture has a face value of Rs 10,000, and the securities are backed by book debts, giving investors an additional layer of protection.
That monthly coupon structure is particularly attractive in the current environment because investors continue searching for predictable cash flows. The debentures will also be listed on the wholesale debt market segment of the Bombay Stock Exchange, improving liquidity, but investors will still need to monitor the company's receivables and operational performance carefully to assess the underlying credit risk, despite the secured nature of the issue.
Moving to the pharmaceutical sector now, ICRA has upgraded Wockhardt Limited's long-term credit rating from BBB positive to A- stable, while fund-based and non-fund-based facilities have also been upgraded to A- stable and A2+. The upgrade reflects improving financial health, stronger business performance, and the company's expansion strategy across India, Europe, and emerging markets.
And that's a meaningful shift for Wockhardt because a stronger credit profile directly reduces borrowing costs and improves lender confidence. At the same time, the pharmaceutical industry remains intensely competitive, so sustaining profitability and executing expansion plans efficiently will be critical if the company wants to maintain this improved rating trajectory over the long term.
CARE Ratings has also reaffirmed Manaxia Steel Limited's bank facilities totaling Rs 500 crores, maintaining a stable outlook. Long-term facilities worth Rs 60 crores continue at CARE A- stable, while short-term facilities of Rs 440 crores remain at CARE A2+, reinforcing confidence in the company's debt servicing capabilities.
That stability is extremely important in the steel sector because manufacturing operations are highly capital intensive and depend heavily on uninterrupted access to financing. Investors and lenders will continue watching quarterly earnings and future rating actions closely, since any significant deterioration in financial performance could immediately impact borrowing conditions.
Prestige Estates has meanwhile approved audited results for the financial year ending March 31, 2026, with unmodified auditor opinions, and the board has recommended a final dividend of Rs 2 per equity share, representing a 20% payout. More importantly, the company has approved a private placement of non-convertible debentures worth up to Rs 2,000 crores, signaling a major funding exercise for growth or refinancing.
Exactly, Vijendra. That debt raise could significantly influence Prestige Estates' leverage profile and future expansion plans across residential, commercial, and hospitality businesses. Investors will be closely tracking how the company deploys this capital, what interest costs emerge from the issuance, and whether the shareholder approvals at the annual general meeting proceed smoothly.
In the housing finance segment, ICCE Home Finance accepted bids totaling Rs 5.5 billion for a 3-year floating rate bond carrying an initial coupon of 7.25%, resetting quarterly based on the 3-month Treasury bill yield plus 1.93%. The issue is rated AAA by ICRA and witnessed strong investor participation within a very short bidding window.
And alongside that, Tata Capital accepted bids totaling Rs 29.5 billion for bonds maturing in 2 years and 9 months with an initial coupon of 7.42%, also resetting quarterly based on Treasury bill yields. With AAA ratings from CRISIL and ICRA, Both these issuances clearly demonstrate that investor appetite for high-quality floating-rate debt remains extremely strong in the current market environment.
Turning to government securities now, Indian government bonds are expected to remain volatile with yields on the 6.48% 2035 benchmark bond projected between 7.07% and 7.14%. The government is preparing a bond sale worth Rs 320 billion across 3-year, 7-year and 30-year maturities, increasing supply pressure in an already cautious market.
Those concerns are being amplified by expectations that the Reserve Bank of India could raise interest rates by 25 basis points in both June and August to contain inflation risks linked to elevated crude oil prices and Middle East tensions. Currency pressures are also persisting, with the rupee trading around 96.2 against the US dollar, while overnight index swap rates continue signaling expectations of tighter monetary policy ahead.
Indian Overseas Bank is also planning a major capital raise in financial year 26-27, aiming to mobilize up to Rs 5,000 crores through equity routes such as follow-on public offer, rights issue and qualified institutional placement, alongside Basel III compliant Tier 2 bonds worth up to Rs 1,000 crores.
The bank also plans to issue 10 crore equity shares to employees under its incentive scheme while using the share premium account to clean up accumulated losses and strengthen the balance sheet. However, the entire fundraising plan depends heavily on regulatory approvals, shareholder support at the July 7, 2026 annual general meeting, and broader market conditions at the time of issuance.
Basilic Fly Studio Limited is seeking shareholder approval through postal ballot for loans and guarantees worth up to Rs 50 crores to support subsidiaries and associated entities. The remote e-voting process opened on May 21st and closes on June 19, 2026, with the results expected by June 23rd following scrutiny by Alagar and Associates LLP.
The timing is significant because the company's stock has faced heavy declines over the past year and longer periods, making this internal financing support potentially critical for operational stability. Investors will interpret the outcome of this vote as an indicator of management's broader strategy for sustaining group businesses during a difficult phase.
Sudarshan Pharma has revised the fixed exchange rate for its foreign currency convertible bonds to 96.8441 rupees per US dollar from 95.93, aligning with the Reserve Bank of India's reference rate on the subscription date. The issuance size remains $20 million with an 8% coupon and maturity of 3 years and 2 months.
That revision increases the rupee equivalent of the issue to nearly Rs 193.69 crores and highlights how currency movements directly impact foreign currency bond valuations. The company has already secured shareholder approval, in principle clearance from the Bombay Stock Exchange, and authorization for senior management to complete procedural formalities under SEBI regulations.
Philatex Fashions also approved several important resolutions during its extraordinary general meeting, including the issuance of foreign currency convertible bonds, increasing authorized share capital, reclassifying promoters into the public category, and expanding investment limits for foreign portfolio investors and non-resident Indians under the Companies Act 2013.
These measures could broaden funding flexibility for the company, but investor confidence remains fragile after steep stock declines of more than 52% over 1 year and more than 91% over 5 years. The market will now focus heavily on execution quality, transparency, and whether these capital initiatives can actually stabilize operations and restore growth momentum.
Centrum Capital has approved audited results for financial year 2026, along with a massive capital raise of Rs 2,000 crores, split equally between non-convertible debentures and equity instruments such as rights issues or qualified institutional placements. The board also reappointed M/S Sharp and Tanan as auditors for another 5 years after an unmodified audit opinion, reinforcing continuity and investor confidence during this major funding phase.
And finally, the government has defended the write-down of Yes Bank's additional Tier 1 bonds worth Rs 8,415 crores during the 2020 reconstruction, arguing that the move was essential to protect depositors and stabilize the financial system. State Bank of India's infusion of nearly Rs 8,000 crores depended on that write-down, but with the Supreme Court now reviewing the legality of the action and protections for retail investors, the outcome could set a landmark precedent for India's banking and bond markets.
That wraps up today's major developments across India's debt and credit markets. From floating rate bond issuances and large-scale capital raises to rating upgrades, regulatory scrutiny, and government bond volatility, the coming weeks could prove crucial for investors tracking interest rates, liquidity, and corporate credit trends. Stay tuned to the DebtCircle podcast for more market-moving updates